Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. Today I want to talk about a very interesting topic that's creating a lot of discussion, and that is this downtrend line here on the S&P 500 that was broken back in January. What that actually means for the stock market, whether we've seen anything of the sort in previous bear markets like 2008, 2002, and other big market drawdowns like in the 1970s. Many technical analysts out there claim to say that this significantly increases the odds that we see a resumption of the bull run. So we're going to take a look at what happens in typical bull traps throughout bear markets in history, see how similar they've been to today, if we can draw similarities, and if there are certain characteristics that we can point to and say, okay, if we see that, we know that this is not a bear market rally, staying objective. Of course, don't forget that there are many opinions out there on the market. I love to give mine. I'm very grateful for this community to give me the chance to share my opinion. But remember, stay open-minded, think independently, take everything that you hear online with a grain of salt, and of course, don't forget to smash the like button as hard as you can. Now, without further ado, let's get right into it. Now, before we dive into history, I want to take a look at some of the short-term developments that we're seeing on the market and keep you guys up to date on that. So if we head on over to the watch list that we have on gameoftrades.net, click on the S&P 500 and make it full screen. We can see the key structures we're looking at, the key levels we're looking at, and our current thoughts on what's happening on the market. This is a feature that was recently added to our website to give members a live look at all the structures, the levels that we're watching, and what our short-term base case scenario is for all the various assets that we think are important right now. So if we look at this structure here, we have a bullish structure, this price channel that had reactions from October, January, right here, and now it seems to be breaking down. So yes, this price channel, this bullish structure is breaking down. That does by itself objectively increase the odds of downside. That said, that's happening right above a very important short-term zone of support. There's just so much support here with the 200-day moving average, the 3,900 support level, and this downtrend line that's coming down. So buyers are going to step in here. A short-term bounce off these important levels is on the cards. If we have the slightest positive surprise on economic data, could fuel a bounce here, revisit this resistance at 4,100 points, or even make a marginal new high. But this video is not going to be focused on the short-term stuff. We want to study the bull traps throughout history. So let's take a look at that. The first one being this bull trap in 2008, of course. Let's draw a downtrend line here, right there, that captures these two important highs that we had in 2007. So you can see a clean downtrend line here, quite a few reactions, 1, 2, 3, 4 reactions. Then you can see the markets broke out in April during a bull trap that lasted around 65 days, 63 days here. So in this first example of a bear market, you can see in 2008, there was clearly already, we can see a breakout above the downtrend line that triggered optimism amongst investors in the market, and that happened during the big bull trap. I also want to take a look at momentum in this video. So let's take a look at the MACD on this weekly chart. Momentum is also going to be an important part of this video because I want to show you the behavior of the price and what that looked like in these bull traps and whether that looks similar to today. And you'll see there's some very interesting conclusions that we can draw. So momentum flipped back into bullish territory back here in April at the beginning of the bull trap. And then you can see back here in around June of 2008 as the markets weakened, you had a bearish cross right here. Now that bearish cross actually happened below the zero line on the MACD. Now, the reason that's important, and this is how technical analysis works, when the MACD on the weekly chart is above the zero line, that's considered a bullish trend. So that is pretty much what we had between 2003 and 2007, a bullish trend. But when the MACD is below the zero line, that's when you're in a bearish trend. So a crossover, a bearish crossover like here in June 2008 that happens below that zero line here in a bearish trend does signal a bull trap. And as I'll cover in just a couple of minutes, this is a very important point because that never happens during real bull market recoveries. Now let's rewind to the 2000 bear market. Now there were lots of bull traps in this bear market, but I'm going to choose the most important one, the most significant one, where you did see indeed a break of the downtrend line. Now you can see quite a few reactions here at the top. Of course, grabbing the all-time high here in August. You had a brief tag at the beginning of 2001. You had a tag here in May of 2001. And then look at what happened here. You had a powerful bounce and a breakout above this downtrend line in November of 2001. Now, this was during a bull trap that actually lasted 170 days. And we actually see very interesting price action here. This is what I was referring to at the beginning of the video when we looked at the short-term technicals on the S&P 500. We had a breakout, a retest, and a resumption off that trend line to come back and retest that high before the markets eventually did fail and capitulated down in the months ahead. So that is a scenario that we could very well see. Breakout, retest, resumption, failure. That was still very much a bull trap, but look at what remained very consistent here. The weekly momentum, the MACD here flipped into bearish territory here in April of 2002, below the zero line, right? So markets trending up between 1995 and 2000, MACD staying above the zero line consistently. And then look at what happens. MACD dips below the zero line and you get a bearish cross here, momentum flipping back into bearish territory in 2002, telling you momentum was too weak here, too weak, not strong enough to really say, okay, we're in an uptrend now, which is actually what happened in 2003 right here, where momentum came back into positive territory before showing any type of weakness. So we've taken a look at the 2008 and 2000 bear market. Let's go back even further in time and look at 1974. Now, these are really, for me, the three big crashes. 1974, 2000, 2008. They are very similar in size and magnitude and just how devastating they were for investors at the time. So let's zoom in on 1974 and see if there's a downtrend line that we can draw here. And of course, there is, right? You can see the all-time high, another reaction here in February, another reaction here in July, and then the markets broke out in September of 1973. If we count this as the bottom, the bull trap lasted a total of 110 days. What did we see with momentum? What did we see with the MACD? Of course, a bearish crossover below the zero line, confirming that indeed the trend remains bearish and not bullish like it was between 1970 and 1973, or like it was between 1975 and 1976. So this is another example where you did see this bull trap of the bear market break out above a downtrend line, and yet momentum was too weak. It flipped back into bearish territory and the bear market resumed. Now, while we're here, we can also quickly take a look at 1969, where you actually didn't see a false breakout above the downtrend line. You can see here we had two reactions right there, and once the market did break out above this downtrend line, they never looked back and went on to make a 45% run over the next couple of years. Is there anything we can learn from this episode in particular? Well, first of all, look at the MACD. Do you see any bearish crossover here during this rally? And especially this part of the rally, is there anything that resembles what we saw, for example, in 1974, where momentum flipped back into bearish territory during a bearish trend? No, that did not happen on this move. So that's definitely something we can learn from this episode. If momentum does show strength coming back into bullish territory, that's a very strong sign that the bear market is behind us. So what can we say about 2022 and how those episodes resemble what's happening today? So we had a breakout right here in January of 2023. The rally has so far lasted 112 days from the bottom to the top of the rally. And the MACD is currently at the zero line, but in a bearish trend, coming back from below and currently potentially turning back lower. So as I mentioned earlier, this is one of the big things that momentum can help us with. If we look at all the significant recoveries we've seen on the S&P 500 that were not bull traps, and we can take a look, for example, at 2020. We can take a look at 2018, 2015. A lot of people were saying bull trap in these instances in 2016, 2019, 2020. But look at what momentum was telling you here. Momentum in 2018 was back in bullish territory. Same thing in 2020. The same thing happened in 2009. Momentum came back into bullish territory. 2003. Momentum coming back into bullish territory. So what is the conclusion from all of this? Well, first of all, we can absolutely confirm that the fact that the market has broken this downtrend line does not mean that the bear market is over. It has happened before in other bear markets where the downtrend line was broken and yet the bear market resumed. In fact, that seems to be the norm. If you're subscribed to our service at gameoftrades.net, you'll know that we do think that there is more weakness ahead on the S&P 500. We downgraded our S&P 500 target back on the 4th of February as the markets were topping out. However, the evidence does point to the fact that if we see another run decisively higher, taking out this previous high, sending momentum into bullish territory, that starts to look very different to any of the bear market rallies that we've seen throughout history, at least in the biggest bear market rallies that we've seen in recent financial history. So I hope you guys enjoyed this video. If you did, don't forget to smash the like button. These videos do take quite some time to prepare, so if you want to help support the channel, don't hesitate to do that. Now, in the meantime, I wish you good luck on your trading and see you next time.